italiana della CFA Research Challenge. Questa è stata una edizione particolare e sicuramente abbiamo avuto l'impatto anche noi del Covid, quindi sicuramente nella modalità di svolgimento è un po' diversa rispetto a quello che siamo stati abituati nelle scorse edizioni, però è stata un'edizione comunque molto importante, che ha visto 10 squadre partecipanti. Questo è il record in termini di partecipanti di squadre per la competizione italiana. È stata una edizione che ha visto appunto tante università coinvolte e tante università che hanno veramente fatto un ottimo lavoro. Quindi diciamo noi come organizzatori siamo veramente molto contenti di questa edizione. Come prima cosa voglio sicuramente ringraziare il nostro sponsor di quest'anno, che è stato Faxet. Faxet, oltre a supportarci in questo periodo difficile, ha dato accesso a tutte le squadre a una postazione appunto Faxet, quindi tutte le squadre potevano avere un database informativo a cui riferirsi ogni volta che avevano appunto bisogno di trovare informazioni. Quindi ringrazio molto Faxet per il supporto e per la collaborazione insieme anche quest'anno. Due parole un po' per quello che è la nostra competizione. Come sapete, la nostra competizione fa parte di una competizione molto più grande, una competizione globale che è organizzata tutti gli anni dal CFA Institute. È una competizione che vuole testare le capacità degli studenti, le capacità analitiche, le capacità di valutazione degli studenti, la capacità di scrivere un report, la capacità di presentare il proprio lavoro. Per darvi un'idea della portata globale di questa competizione, l'anno scorso, quindi nell'edizione scorsa, ci sono state oltre 6.400 studenti che hanno partecipato alla Research Challenge in tutto il mondo, per oltre 1.100 università e in oltre 98 paesi. Quindi appunto una competizione veramente globale che appunto ha l'obiettivo di insegnare alle future generazioni di professionisti la best practice in ambito di ricerca sul mercato. Questa è la 15ª edizione che CFA Institute fa appunto della Research Challenge. La nostra competizione locale è iniziata a fine ottobre del 2020, appunto con 10 università. Questa è la 14ª edizione che svolgiamo in Italia, quindi anche noi è da tanto tempo che svolgiamo questa competizione e appunto abbiamo avuto 10 università che coprono un po' tutto il territorio nazionale, quindi sia nord che centro che sud. E questo è stato reso possibile grazie al contributo di tanti volontari che appunto voglio ringraziare. Io voglio ringraziare sicuramente i professori che hanno promosso l'iniziativa all'interno delle loro università e che hanno supportato le squadre nel loro percorso. Voglio ringraziare i mentor, quindi le persone della nostra associazione che hanno seguito direttamente le squadre in tutti questi mesi. Voglio ringraziare i giudici dei report e voglio ringraziare anche i giudici appunto delle presentazioni. Quindi come vedete ci sono tantissimi volontari che lavorano a questa competizione e solamente grazie al loro impegno e alla loro dedizione che riusciamo a svolgere appunto la competizione nel modo in cui riusciamo, che secondo me appunto è veramente molto di qualità molto elevata. L'altra cosa che volevo fare è ringraziare tutti quelli che insieme a me hanno organizzato un po' la competizione, che appunto è stato complicato quest'anno. E quindi in particolare voglio ringraziare Maria Carotta che appunto ci ha seguito durante tutta la competizione, e anche Giorgio Novello, che appunto anche lui mi ha aiutato molto nell'organizzazione dell'evento. Voglio anche ringraziare Rosalba Pinto, che si è occupata della parte di media appunto del divulgare la competizione sui social network, su appunto i canali di stampa, e anche il suo lavoro chiaramente è molto prezioso. Quest'anno appunto le squadre hanno analizzato ERG, e quindi abbiamo avuto l'opportunità di entrare in contatto con questa società e col top management di questa società, e quindi volevo ringraziare in particolare la dottoressa De Lucchi, che ha fatto una presentazione apposta per le squadre, che si è dedicata appunto, si è prestata alla nostra competizione, e che anche questa sera si collegherà appunto per la fine, per le fasi finali della competizione stessa. Quindi anche un ringraziamento a ERG. E infine volevo congratularmi un po' con le squadre che sono riuscite ad arrivare fino alla fase finale, quindi alle 4 squadre che questa sera si contenderanno la palma del titolo italiano, appunto della Research Challenge. Diciamo che già essere qui stasera è un grosso risultato. La gara in Italia è sempre molto competitiva, il livello, come dicevo prima, è stato alto quest'anno, quindi il fatto di essere qui è già un grosso risultato. So che tutte le squadre hanno dedicato tantissime ore a questo lavoro, a questa ricerca, e appunto diciamo che queste ore dedicate sicuramente non vanno perse, sono tutte utili, e che sicuramente accresceranno quello che è il vostro bagaglio di esperienza e di formazione appunto su analisi di società quotate. Però appunto la gara non è finita, appunto. Qualificato che abbiamo selezionato per la finale, che è composto appunto da Alberto Chiandetti, da Emanuele Oggioni, da Dennis Montagna, da Carla Scarano, da Luca Forlani e da Pinuccia Parini. Appunto loro saranno i giudici delle presentazioni questa sera. Appunto sono tutte professionisti molto senior, e sono onorato appunto che oggi si dedichino a questo lavoro, appunto alla giuria della fase finale della challenge. Quindi come si svolgerà un po' questa sera? Allora, le 4 squadre presenteranno per 20 minuti, nei primi 10 minuti non verranno interrotte, e invece nei secondi 10 minuti dovranno rispondere alle domande dei giudici. Appunto presenteranno 4 squadre, diciamo che l'ordine l'avete già ricevuto, quindi prima presenterà l'Università degli Studi di Napoli, poi presenterà l'Università Luis Guido Carli di Roma, poi il Politecnico di Milano, e poi appunto l'Università di Firenze. Come vedete, quest'anno anche in finale abbiamo rappresentato un po' tutta l'Italia, andiamo da nord a sud, a centro, quindi anche a livello di rappresentatività spaziamo un po' su tutto il territorio nazionale, e di questo anche sono contento. Alla fine anche un po' in tutta Italia la nostra competizione ha preso piede, e riusciamo ad avere veramente degli ottimi lavori un po' in tutta Italia. Una volta che le squadre hanno finito di presentare, appunto i giudici si raduneranno e più che raduneranno si metteranno giù le loro votazioni e poco dopo appunto la squadra vincitrice verrà annunciata. Diciamo, la squadra vincitrice avrà poi l'opportunità di competere a livello internazionale, quindi di passare alla fase successiva, di andare a fare la competizione EMEA. Quindi diciamo che siamo pronti per incominciare. Chiedo a questo punto a tutte le squadre di scollegarsi un attimo e diciamo tra 5 minuti chiameremo la prima università che presenta, che è l'Università di Napoli. In bocca al lupo a tutti e che vinca la squadra migliore.
Grazie.
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 Dear members of the jury, good afternoon. We are the team from the University of Naples, Federico II. I am Guglielmo and my colleagues are Marco, Ilaria, Giuseppe and Antonio. Today we are pleased to introduce you our analysis on ERG, for which we issued a buy recommendation with a 12-month target price of €29.20, implying an upside of 12.74% of upside to the closing price of February 5th. ERG embodies a successful transformation story, which is the result of a business philosophy based on sustainable, diversified, and conservative decision. ERG revenue stems from a well-diversified asset portfolio, both from a technological and a geographical point of view, with a good balance between programmable and non-programmable sources. Its business can be divided in 4 main divisions: wind, thermoelectric, hydroelectric, and solar. Wind sector is the main business of the company, which drives most of the company revenue. On the other hand, thermo and hydro represent the programmable sources that enable the company to generate stable revenue. Despite being an early stage segment, solar exhibits the most promising growth due to state incentive. While hydro, thermal, solar end market are located exclusively in Italy, wind end market covers 7 countries in Europe, highlighting a leadership positioning of ERG in Italy and a prominent position in France and Germany. ERG business strategy aims at a constant expansion in the renewable energy sector and heavily hinges on power generation and operating efficiency, which increase installed capacity, enhancing the availability of plants and extend their useful life.
The energy sector's main trends are decarbonization, which indicates an ongoing transition towards a clean and carbon-free economy. Decentralization, referring to geographically distributed electricity with a large number of multi-level producers and consumers, and digitalization, which ERG is implementing through the Project One ICT. The market main drivers are incentives to sustainability, geographical diversification, electricity price, oil and natural gas prices, and European regulations. The renewable industry is expected to grow at more than 6% in the next few years, driven by 4 main factors: the green economy, which refers to preventing loss of biodiversity, the regulated framework, as incentives have a direct impact on revenues, the cost efficiency improvements, which allow companies to increase their operating margins, and finally, the high entry barriers, mainly due to high capital requirements. ERG stands out from the competitors since it specialized in the whole production process, exhibiting a consistent growth since 2016, also thanks to its persistent M&A activities. It shows an EBITDA margin of 46.3%, significantly higher versus competitors, whereas a low capex to sales ratio indicates a conservative budgeting policy.
The financial analysis of ERG fully reflects the company's attitude to be diversified, conservative, and sustainable. Over the years, these decisions enable the company to obtain stable revenues, strong cash flow generations, and a sound financial structure. ERG's well-diversified portfolio of programmable and non-programmable sources will produce low volatility in revenues, also leaving room for consistent growth opportunities for wind and solar sectors. Also, ERG cost optimization strategy will guarantee increasing margins over the years. This enables the company to generate a sufficient amount of cash, which is used especially for investments in wind and solar projects. In the next year, we expect ERG will need a considerable amount of capex to support the growth of the installed capacity, which is required to compensate the negative effects determined by the expirations of the incentives. At the same time, the company has adopted a conservative capital structure policy with low levels of net debt on EBITDA and a sustainable source of financing. We obtain our estimates by disentangling ERG's business by segment and geographical areas. Two main channels determine wind revenues: production and prices. Regarding the production, we expect the decarbonization process to be supportive for ERG growth in Europe. At the same time, we also incorporate the impact of the incentives on prices. The thermoelectric segment also provides significant contributions to the company's revenues, benefiting from a modernization of the plants, whereas those of hydro will be negatively affected by the expirations of the incentives.
Regarding the valuation, our 29 euros and 20 cents target price is the combination of two methodologies, a multiples analysis and a two-stage DCF model. We average those two methodologies with the weights 1/3 and 2/3 to take into account the scarcity of suitable comparables. In the multiples analysis, we first create our basket of comparables based on sites, geography, and the business model. To reduce the estimation error from possible model misspecification and outliers, we consider two different ratios, a 1-year forward EV over EBITDA and a PE ratio. Finally, we equally weight each multiple share price and obtain a target price of 30 euros and 27 cents. The second methodology is a sum of the parts DCF with the Gordon growth model and a separate valuation of the organic and inorganic growth. The implied share price given by the organic growth is 27 euros and 33 cents, at which we add an incremental value of 1 euro and 34 cents from the inorganic part. We projected the free cash flow from operations until 2030 and discounted them using a dynamic WACC, which embodies changes in the short, medium, and the long-run monetary policy. Regarding the inorganic growth, we believe that ERG will continue acquiring private firms, especially abroad, to expand its business. Our methodology computes the unit price of installed capacity for each country, based on the actual information resulting from past M&A operations. To stress test our key assumptions, we performed Monte Carlo simulation, tornado chart analysis, and a sensitivity analysis on WACC and the perpetuity growth rate, which all upholds our buy recommendation. Finally, we investigate the impact of an alternative business model on the former value, the one in which ERG sells thermo and hydro segments in order to pursue an additional growth in wind and solar segment. Our analysis highlights that such a business more concentrated on the renewable would lead to an additional value creation of 2 euros and 42 cents per share.
ERG is exposed to several risk categories: strategic, financial, macro, and regulatory risk. We developed a risk matrix as a useful framework to analyze the severity of each event risk on one axis and the probability of it occurring on the other. We now focus on the most important risks and related mitigation strategies. The group's revenues mainly depend on atmospheric conditions. This risk is mitigated through technological and geographical diversification. ERG also needs to obtain, maintain, and comply with a variety of incentives from the regulatory framework. The company is quite vulnerable to any decrease in electricity prices. In order to mitigate this kind of risk, ERG invests in commodity CFD instruments.
The ongoing COVID-19 pandemic has led to a significant drop in electricity demand, with a dramatic reduction of productions of goods and services, only partially offset by high residential use. At the first sign of emergency, ERG promptly took actions, putting in place all the necessary measures to ensure safe work conditions.
Sustainability is ERG core business. The company contributes to the green economy thanks to its reduction in carbon index, reblading and repowering operation, and plastic-free project. Thanks to its continuous care for the environment and the biodiversity, ERG has been assigned a single A and a double A from the two main rating agencies. ERG relations are in line with the principles established by ERG Code of Ethics, such as lawfulness, honesty, integrity, and equality. The company believes employees are the essential factor behind the existence and the success of its business. ERG business is managed by 12 members board of directors, respecting the series of eligibility criteria, such as gender balance, age, and professional career, in order to better pursue the valorization of diversity. The corporate governance system is strongly oriented towards business ethics to ensure a sustainable business management in full compliance with legality, transparency, and fairness. Finally, we developed a framework to evaluate ERG ESG performance. In our scorecard, we take into consideration several factors, including impact on climate, waste generations, employees' relations, defense of shareholders' rights. ERG exhibits a 74% compliance to ESG criteria, confirming its major strength in the environmental dimension, as well as a significant improvement in social and governance practices.
To conclude our presentation, we issue a buy recommendation on ERG given the strong growth opportunity. We also believe the company may further benefit from an aggressive business strategy, more concentrated in the renewable. Thanks for your attention, and now we will answer to your question.
Luca Forlani.
Yes, good morning to everyone. Listen, but does it pay any dividend, this stock, for my portfolio? Or so should I consider it an income stock or a growth stock, a value stock? So it's more a, let's say, a general question regarding the profile of the stock in itself. So I have understood that they have huge growth opportunities, but I'm still knowing nothing about the company. I don't know if it is a utility, is an energy company, it's a, what is that? Could you better classify? And if I am a conservative portfolio manager looking for high sustainable dividend, is it worth for my portfolio or not?
Okay, I'll take this question. And yes, regarding the general dividend policies that you're also seeing here on the slides, in particular, thanks to the growth profitability profile of the company, and despite also the increasing investments and also the COVID impacts that all the companies had during this period, the company is able to sustain very strong and also profitable dividend policy structure. In particular, in the latest shareholder meetings, it has been decided to pay a dividend of 75 cents per share. And this is also a very strong dividend policy, despite the increasing investments, because the company is endowed by a strong amount of cash.
Ok, Pinuccia Farina. Non ti si sente? Non ti si sente? Devi aprire l'audio.
Thanks a lot for the presentation. If you can go back to the slide where there are all the peers, can you just elaborate a little bit how does ERG compares with the others and what kind of valuation gap, if there is one, or valuation premium? Can you talk a little bit about that, please?
I'll take this question. Well, we have selected 4 suitable comparables for ERG. In particular, we have followed a 3-step methodology in which we have selected the suitable comparables based on size, geography, and business model. In the first step, we have collected all the companies which belong in the sector of the energy, of the utilities, and the sub-industry of the independent power producers' electricity. Then, in the second step, we have applied 2 criteria: the size in terms of market capitalization and the geographical focus. Then, in the last step, in the third step, we have selected companies which has a business model similar to the first one. Finally, we end up with 4 competitors, with 4 comparables: Iberdrola, Falk Renewable, Terna Energy, and EDP Renovables.
If I can add, we underweight the multiple analysis with weight in our valuation 1/3 to taking into account the scarcity of suitable comparable to ERG.
Thank you.
Dennis?
Yes, good afternoon. Please, can you explore more in detail the strategy for the company? Because it seems that the growth following your presentation comes only from solar part. Can you explain better? I mean, I have to buy this company only for the solar growth, or do you see other drivers, other attractive point of view?
Okay, I'll take this question. And in particular, we believe that it's not only about the solar assumptions that we made, in particular regarding our forecasts. We only have considered wind forecasts for our estimates. And in particular, we have disentangled CRG's business by segment and geographical areas. And in particular, we have considered 2 main drivers for the productions, which are the same for all the renewable, more or less the same for all the renewables company in the sector, mainly related to the load factor, the installed capacity, and which will, during our estimates, the forecast for our estimates, we consider the further expansions of, in particular, of these sectors, the wind and solar sector. And at the same time, we also consider the impact on incentives on prices, but at the same time, also thermoelectric and as well as the hydroelectric segment provide a significant contributions to the company's revenues. So it's the strategy of the company is a perfect mix, a perfect balance between well-diversified, perfect balance of a well-diversified portfolio between programmables and non-programmable sector composed by 4 segments: hydro, thermoelectric, wind, and solar.
May I jump in?
Yes, yes.
Okay. If you just stated that the strategy is complete because they have both renewable and programmable generation, how come that you provide such a value creation from the disposal of the 2 programmable or more programmable source of energy generation? Where does the value creation come from if they were to dispose of that part of the business?
Well, I'll take this question. In our opinion, the actual business model of the company is too conservative. The company is missing some opportunity, some growth opportunity, and then is missing some profit. Then we do an exercise in which we compute an alternative scenario, and in which ERG will sell thermo and hydro segment that contribute to the low volatility in revenue. And I agree that this strategy is more risky, is riskier. But if ERG sells thermo and hydro segment and reinvests the return in wind and solar segment, the risk is compensated by a high level of revenues.
So the question would be, if you had to rank the expected return on investment out of the 4 technologies, wind, solar, or let's say renewable and programmable, where do you get the highest return on investment?
Well, I'll take this question. If the company will dismiss thermal and hydro segment, will have a return of 1.014 billion that will reinvest in our estimation, obviously, and will reinvest this return in M&A activities and in wind and solar sector, and we will have a higher volatility in revenues that, in our opinion, since the company is able to catch the growth opportunities, will have an additional benefit of €2.42 per share.
I would add that regarding this, of course, we estimated that the more favorable sectors are the wind and solars, and we believe that this possibility, so this scenario would be a very growth scenario, since the favorable framework, conditions and the increase in the sustainable attention from the. So we expect a higher increase in the renewable demand. So these sectors, totally renewable, wind and solars, are expected to grow a lot, and so are the main factors for the revenues.
If I can add, currently both programmable and non-programmable sources are fundamental for the revenues of the company, because, for example, wind sector accounts for the 40% of the revenue of the company, but also the thermal segments account for the 39% of the 40% of the company revenue. So there is a well-diversified asset portfolio that provide the company to have a low revenues volatility.
Carla?
Thank you so much. I've seen in the slide of the 2-stage DCF, I don't know if you can go to the slide of the value that you get from the the 2/3 of the valuation that you get from the 2-stage DCF. I've seen that you change the cost of capital assumption. I don't know if that's the case. So I don't know if you can go to the slide, please, of the 2-stage DCF that you showed. Okay. After the relative valuation. So you have changed the assumption that you have used for your DCF on the WACC that you have used. Can you share with us why is that, and under which circumstances? The WACC in order to get the value of the company changes.
In our valuation,
so I don't know if it's clear.
Yes. In our valuation, we use a dynamic WACC. In order to get the WACC, we use a weighted average between the cost of debt and the levered cost of equity. To obtain the cost of equity, we use the CRPM formula, and we obtain the risk-free rate as a country-weighted average of the 10-year government bonds, while the equity risk premium as a country-weighted average of the market risk premium, and finally the levered beta regressing the log return of the ERG stocks versus the Euro Stocks 600 index. On the other hand, we use a dynamic cost of debt to take into account a possible normalization of the European monetary policy deriving from the long-run growth and inflation expectation. In particular, on the cost of debt, we use an augmented Merton-Black-Scholes model to compute ERG spreads. Furthermore, to validate our results from the Merton-Black-Scholes, we use our internal model to compute the forward-looking evolution of the credit spread of ERG. And through the methodology that you can see on the slide, we have obtained a rating for ERG of Baa3, consistent with the Moody's one.
I would add that our cost of debt is substantially a sum of two components: a risk-free rate and a spread premium. To take into account, as Guillermo said, the normalization of the ECB policies, we consider three different risk-free and so 3-stage. For the current stage, what we did is to look at the 10 years Germany treasury bills, while for the long run, we take into account the 5-year forward inflation swap rate, which is a common proxy that incorporates the expectations of the markets about future inflation. Regarding the spread premium, what we did is to evaluate our priority model that gives the value of the premium for each issuer, for each energy issuers, as a function of substantially two types of variables: fundamentals and financial variables, which are stock price volatility, duration, and risk-free rate. And about the fundamental variables, what we did is to take there the variables that we use in the forecast of our valuation, and so to get us these points.
Many thanks to the team of Università di Napoli. Many thanks. Congratulations.
Okay.
Thank you. Bye. Bye. See you later.
Dear jury, welcome from the Louis Blue team. Here is a quick roadmap of the topics we will cover in the next 10 minutes. In 2008, oil accounted for 2/3 of ERG's total EBITDA. Fast forward slightly more than a decade, and you find a greener company with 4 energy sources and a perfect balance between programmable and intermittent ones. Geographic diversification does not look as good as technological one, but without accounting for the increasing efficiency for the Italian asset base through repowering and reblading, the wind and solar pipeline would prove how successful the company has been in expanding abroad. Moving on to the operating environment, 2021 can represent a turning point for the whole industry. In 2020, the production of renewables in Europe overtook fossil sources for the first time ever. Positive regulatory developments in Italy and in Europe are good news for the industry operators, but good news can also attract new competitors, especially from the oil and gas industry. All major oil companies are investing in renewables and also in green hydrogen, considered to be the best candidate to speed up the decarbonization of the whole system. Last Saturday, Corriere della Sera highlighted how more and more funds are using ESG considerations in their investment mandates. In our opinion, this will further increase the pressure for oil players to go green, or at least to try to lower their emissions as much as possible.
We now dive deep into ERG's accounting figures. We performed a section of financial analysis to better understand ERG's financial position, consider its historical growth and competitive positioning. The equilibrium between programmable and non-programmable sources lets ERG revenues be less sensitive to both systemic and specific risk. ERG excels in liquidity. Cash ratio higher than 2, negative cash conversion cycle, and average cash to sales ratio rank the company first in liquidity. ERG is a cash generating machine, considering its higher than average cash conversion ratio over 3 and a consistent free cash flow margin over 20%. However, leverage is quite high, but mostly concentrated in long term and fastly repayable, considering ERG's current EBITDA. This affects negatively the company's creditworthiness, rising its debt cost. Higher leverage brings also to low efficiency, considering an asset turnover ratio of 0.3 below the average of 0.4. Nevertheless, ERG is very effective in working capital management, considering its turnover higher than 6. Furthermore, ERG enjoys newer assets that depreciate rapidly, meaning lower immediate capex needs and higher free cash flow generation. Talking about profitability, ERG has higher than average gross and EBITDA margins due to its effective internal hedging system and decreasing prices, impacting much higher cost-intensive energy sources. Returns on capital are decreasing and inferior to comparables due to D&A, financial expenses, and a lower tax shield. Dividends are not indexed on a standard payout policy, but on the average paid by its competitors. However, we believe that this policy is risky because it does not consider the amount of earnings generated by the company. Finally, we backtested some quantitative value investing strategies to see if companies belonging to the renewable energy sector with the same score of ERG gained abnormal returns. And so it was, considering that Piotrowski F-score and Altman Z-score applied to the renewable energy sector outperformed our Eurostat 600 benchmark by more than 10%. ERG has a current F-score of 5/9, ranking in the middle range, aligned with the average of its peers. To be more rigorous with our analysis, we also introduced a 5% adjustment factor as a passing score threshold. Moreover, M-score and Z-score are on the safe range, endorsing our beliefs on ERG's earnings reliability and future solvency. Finally, from our growth assumptions, we estimated ERG's future financial evolution. Liquidity will keep being strong. However, leverage ratio will grow up to 1.5, even if still concentrated in the long term. ERG's future financial margin will likely to decrease due to competitive pressure. However, returns on capital will grow significantly due to lower D&A impact on operating income and the lower cost of debt following ERG's stable future creditworthiness.
we assessed ERG target price by following a sum of the part and top-down approach. Based on industry forecasts provided by the International Renewable Energy Agency and our estimates, we forecasted expected capacity installed up until 2025, following company guidance provided in the 2022 business plan and our assumptions. Overall, it can be seen that the capacity installed for wind, solar, thermo, and hydro is expected to grow at a +6% CAGR by 2025, a positive result, but still under market expansion pace, corresponding to a +7% CAGR. This means that ERG is going to slightly lose its market share in all the 4 segments, except for wind installed abroad. We can see that ERG revenues are expected to grow at a steady pace in the future, but a +3.5% CAGR cannot be considered an outstanding result. On the back of what I said before, the expansion of the wind abroad market share is driven by an increase in the company geographical diversification. Revenues from abroad are expected to pass from 26 to 39%, mainly driven by expansions in Germany, UK, and France.
Our recommended target price of 28.74 comes from an asset side valuation and 12% upside to the close of the 3rd February 2021. This supports our hold recommendation and results from a 3-stage DCF, an explicit period from 2021 to 2025, a smoothing growth component until 2030 that reduces the impact of the terminal value on our valuation, and then a terminal value for the steady state. Then we show a recap of all valuation methods that we applied in the shape of a football field, and we can assert that all valuations lead to the same recommendation. We performed a relative valuation against ERG's closest comparables using common market multiples, and we got an average target price of 29.88, supporting our DCF outcome. We also performed an EVA valuation through a multi-stage residual income model, and the model suggests a target price in line with our DCF result. We tested our target price with the Graham's formula, and the formula yields a target price of 30.22. At last, we considered the real option analysis, and we considered the two options, expansion and delay. By construction, they are both calls, so their value cannot lower the DCF target price. We also checked our DCF results with a sensitivity analysis, and it suggests the hold recommendation being the most frequent, confirming our result. Lastly, we built a Monte Carlo simulation model to test the sensitivity of the stock price with respect to changes in selected variables. And our analysis shows that only 43% of the simulations support a buy recommendation.
We proceed with our analysis, emphasizing the main investment risks capable of undermining our hold recommendation. Instead of only listing them, we quantified each risk, considering specifically ERG's response. The company already puts great efforts mitigating the majority of such risks with tools that span from hedging mechanisms to continuous monitoring. Still, there are 2 specific ones that we consider critical, their inclusion in the incoming business plan. Starting with cybersecurity, it is imperative for strategic energy companies to ensure infrastructure integrity against threats like data theft and sabotages. The company already reacted in 2019 by adopting force-point security for employees. However, failure to deploy strong solution at the infrastructure level could bring serious consequences for business continuity and reputation. In light of very recent developments in capital markets, we deem appropriate to also consider refinancing as a potential threat to ERG. A sizable part of ERG's debt will expire at the end of 2022. Should the current expectation on rising inflation and interest rates become a reality, ERG will be significantly exposed. We already accounted for this by correcting the valuation risk-free rate with the Taylor rule. However, a likely sharp increase in interest rates could be dangerous for such a procyclical and capital-intensive company. We now proceed with arguably the most critical factor, ESG. It has been assessed by a quantitative model that takes into consideration more than 50 metrics and yielded a final output of ERG being in the 80th percentile among an extended sample of energy producers. Environmental factors have been proved to be critical for ERG's success. The company excels in clean energy commitment with low emissions and a clean energy output 20 percentage points higher than the average peer. 87% of waste recycle is an exceptional result. ERG is not far from the perfect score, and we believe it can be achieved starting from the rumored CCGT plant disposal that will yield lower waste, consequently lowering the company's carbon footprint. ERG is an industry leader in social. More than 80% of revenue is ISO certified. Employees benefit from continuous training, and the adherence to supplementary codes of conduct boosted its score. Moreover, ERG did not lay off employees due to COVID, rather it provided added healthcare benefits. Even if social is very strong, to reach full marks, ERG needs to perform marginally better in workforce diversity and executive wage gap metrics. Should also the company be successful in decreasing employee turnover, it will strengthen its lead. Talking governance, diversity at the board level is better than average for gender, but lacks with respect to age variance. ERG's strengths are the composition of committees, executive pay metrics, and disclosure. We believe ERG's dream team needs adjustments, as the lack of independence of the chairman, the missing independent lead director, and the ownership factors affecting takeover defense affect its score in a manner inconsistent with the strong performance showed by the other pillars. CSR drivers are some of the best in the sector, especially community awareness and third-party relations are solid foundations. The immediate reactions to climate and COVID crisis are also enhanced by a strong ESG consideration. We do believe ERG has some potential, but it is currently unable to unleash it. We found some issues not completely disclosed to the market. Nonetheless, we suppose the company is in the process of tackling them and is temporarily refraining to publish them for strategic reasons. Finally, we would like to thank both ERG and CFA Italy for this amazing opportunity. We certainly know that after this challenging experience, we are much better prepared for our future career. And we all want to thank you for your attention. Brought to you by Louis Blue Team.
Okay, may I?
Pinuccia prima.
Okay, sorry, Pinuccia.
No, but same. Well, thanks a lot for the presentation. One quick question related to your last comment, which hasn't been very clear for me. Do apologize for that. But what were you referring when you said that there's something that the company is not making really clear and less? Can you just clarify that? And then going back to the cybersecurity, the issue that you pointed as a risk is because you think the company taken the right steps to do it, and do you reckon there's a lack of investment from that point of view? Can you elaborate on that? Thanks.
I was exactly referring to that when I was talking about what is not disclosed to the market, and that's pretty clever not to disclose cybersecurity procedure to the market because it holds the company liable in the case of an attack. The problem with cybersecurity is that the majority of the wind farms in Italy in general are not designed to have IoT cybersecurity system in mind because much of them are old. And for this reason, we do believe there is certainly for a strategic company, energy company like ERG, to be subject to this kind of attacks. The real key here is prevention and not curing the issue, because it will yield reputational damages in the future, and the stock price in the end, the market capitalization will be affected long term. I hope I was clear.
Thank you.
Dennis?
Yes, afternoon. Just a quick question in terms of feeling. You present an old recommendation. That is based because the growth is not longer here. Do you see risk in terms for the company to grow or on the return on capital? I mean, what is the area of concern? And the second question, what is eventually the catalyst that can turn your recommendation more positive? Is a clear question or I have to repeat?
Yes, it's clear. And I would say that we assessed some critical points in the expected future for ERG. And as I mentioned before, we forecasted ERG's capacity installed up until 2025 by considering by taking account many factors, such as the new developments in the renewables industry and the European objective to decarbonize countries in the medium term. And we think that this will attract new and more competitors in the future. And we, from our assumptions and our forecast, we saw that ERG is going to lose a little bit its market share in all the relevant segments, except for the wind installed abroad. As we mentioned before, this is not a heavy difference between the market expansion pace and ERG expansion pace. It is almost 1% CAGR by 2025. So this is not something very heavy that could undermine our old recommendation in negative, so proposing a self-recommendation. But still, since it is a slight loss in market share, we think that as of nowadays, it is required a further commitment from ERG in order to keep the pace of the market and in order to be not undermined by the possible competitors coming from the oil and gas industry, for example.
Just, I mean, because of that, because of new entrants coming in, which are your assumptions? Can you share with us your assumptions in terms of power prices? I mean, given, I mean, the fact that you would expect more competition coming.
Okay, I can answer this question. We believe that the margins will probably decrease due to an higher entrance of the oil and gas industry companies in the renewable sector. And our assumption on the price of the energy are given by the mechanism of the CO2 price emissions. We have to consider that the CO2 prices are very likely to increase as given by the commitment of the European community. And why this? This is how the European Union tries to govern this market, making more profitable the clean energy rather than carbon-based energy. So for this reason, we believe that the cost of energy for renewable companies will likely to reduce in future, while for oil companies and carbon-based companies, energy companies, we believe that it will probably increase, lowering, making less convenient to stay in such a business and more convenient to enter in a renewable energy business.
Emanuele?
Good evening, everyone, and thank you for your presentation. I have two questions. The first one is on the long-term outlook for the sector, not only for ERG. So which is, in your opinion, what is, in your opinion, the long-term outlook for the sector, for the renewable sector, and in particular for ERG? And the second question is on your hypothesis on the valuation, on the estimates. You included an additional capacity per year. So I wonder to what extent you have considered the projects in the pipeline of ERG. Thank you.
I can answer the first question if my colleagues agree. So we have a positive view about the future outlook of the whole sector, because it benefits from a welcoming regulation both in Italy and in Europe, and I would say in the world. is heading towards decarbonization. So regulators are very, very positive towards renewable energy producers. And we have seen it with the cost of CO2 increasing and increasing in the past and likely in the future, as my colleague mentioned, and with a vast framework of incentives in every country in Europe. So our view about the future evolution of the renewable sector is very positive. However, we are a little bit concerned about two things. First one being the already mentioned possible entrance of oil players in the sector, and the second one being the likely technological evolutions in the future. We mentioned green hydrogen during the presentation. It seems to be the best candidate for the decarbonization of the system, for the speed up of the decarbonization of the system, but there are many more alternatives under study. They are not quite ready yet, so they are not cost effective as of now. But we believe that since the field is very, very relevant, not only to investors, not only to finance, not only to ag, but to the world, to the whole world population, future investments will speed up the technology advantages on this. And so we believe renewable energy companies have to be aware and to try to invest as much as possible in new technologies in order not to be left behind.
Okay, if I can add up on that and dealing with the assumptions for the capacity installed, we used as a guideline the content of the 2022 business plan that of course included the ERG current pipeline and expectation for investments in the future. First of all, in the UK, that is a very attractive market where ERG seems to be very, very focused on. So to answer your question, yes, we consider the current pipeline.
Thank you. If I may, a quick follow up on the first answer. The
time has finished. We have to complete the presentation. Okay. Many thanks to Università Luis. Congratulations. Very good.
Thank you very much.
Thank you.
Thank you.
Thank you. Thank you. Good afternoon, everyone. We are Politecnico di Milano, and today we would like to show you how ERG, the success master of Italian renewable, is creating value fighting climate change. We initiate our coverage of ERG with a bar recommendation and a target price of 35.3 euro per share with a 45% upside on today's closing price. Three main drivers empower our valuation. First, a leading position in the green energy business. Second, a material re-rating opportunity thanks to a business turnaround. And third, a low-cost organic growth by the repowering of old turbines and constructions of new ones. Let's start with the group history.
ERG, born as a petrochemical company in Genoa, founded by Edoardo Garrone in 1938, and it grew in this business until the end of the century. In 2006, the group entered in the wind power production business, starting a process of asset restructuring. Then, in 2016, the company completed the exit from the oil business. Today, ERG is the largest wind power producer in Italy, and it also manages hydro, solar, and gas plants for a total installed capacity of 3.1 gigawatts. ERG operates in the business perfectly balancing its two souls. The first is the cash generative activity related to the power production, while the second is the asset management that optimizes the use of the capex to build and trade production assets. What about financial performance? The top line set around 1 billion euros in the last 5 years, since the expiration of incentives on production plants offset the positive effect of the growing asset base. Despite that, the company expanded its margin and boosted the cash generation, which is due to the production mix more and more balanced towards renewable assets that have indeed higher marginality. But let's talk about how the electricity selling price is settled. The two main components are merchant price and an incentive. The merchant price is determined on the electricity market, where energy is traded like a financial future. The second
mi
is
accendi la
generally a
luce.
premium, and it depends on the country and incentive, while recent ones have access to a Dutch auction, where producers fix the incentivized selling price for the following 20 years. ERG operates in a fast-growing market. The European downstream demand of electricity is expected to double by 2050 as a result of electrification process led by the decarbonization of the economy, while the upstream energy transition will sustain a high single-digit growth for renewables in the next decade.
Now we are going to present you the core of our investment thesis. We expect our business turnaround divesting hydro and gas plants to become a pure renewable player with a consistent re-rating. Three fundamental drivers support the transition. First, the carbon-based nature of the gas plant. Second, the low EBITDA margin of the gas plant compared to the other sources, 17% against 73% for the wind and 80% for the solar. And third, the uncertainty on the future of the hydro asset, with the increasing exposure to the merchant price and the expiration of the concession in 2029. Confirmations of our view also came from the mandates for the sale that the company has already given to two advisors, Rothschild and Mediobanca. We estimate a market value of those assets around 1.1 billion euros, basing our valuation on both a net present value and a past transaction analysis, historical, and we identify the set of possible acquirers that could be interested in the purchase. Thanks to the proceeds from the sale, the company will accelerate the growth in wind and solar businesses through greenfield and repowering strategies, building around 1 gigawatt and generating a 9% IRR on a 30-year investment. The divestment will open a re-rating opportunity for the company, which will become a pure renewable player. Companies within this niche differ from energy mixed utilities for two main reasons. First, as you can see on the left side, the higher EBITDA margin delivered by the incentivized production and by the low operating cost of renewable technologies. And second, a premium valuation of multiples associated to a carbon-free EBITDA.
Last point of our BioEnerg is the opportunity for low-cost organic growth given by greenfield and repowering. Years ago, the construction know-how was limited and M&A was the only option, fast but expensive. ERG is now capable to build its own park. Indeed, we expect greenfield to cover around 70% of the new installation in the next decade, at a price of 1.2 million euro per megawatt for wind and 0.7 for solar. Lastly, the repowering will affect Italian wind plants, which are old and operate small and incentiveless turbines. By restructuring these plants, ERG will increase its capacity, spending just 1 million euro per megawatt, and will benefit from new energy price tag, around 60 euro per megawatt hour for the next 20 years, thanks to the new incentives.
Our valuation is based on a 50-50 DCF analysis and market-based sum of the parts to consider the future cash flows and the market value that renewable assets have. The year-end target price is 35.3 euro per share, with a 45% upside. Our DCF is conducted to the single park level with a bottom-up perspective, taking into account incentive schemes and efficiencies in every single plant. We consider 3 stages to account for different phases of maturity of the company. First, an intensive asset expansion until 2030, in which we model divestment, greenfield, and repowering activities year by year and estimating an installed capacity doubling in 10 years that will deliver a consistent organic growth of company financials after the disposal. Second, a cash cow phase approaching 2050, exploiting 6 gigawatt of asset base that requires low capex. Third, a terminal value in which we considered a renovation of the assets in the long term. We obtain the terminal value with a perpetual justified multiple to underline 2 value generative components, the cash generation and the investments. For the computation of the WACC, we use the Farmer Friend 2 factors model, accounting for a size premium in the cost of equity, which is due to the low market capitalization of the company. The WACC varies according to the decreasing cost of debt, caused by the undergoing process of debt restructuring. Finally, we consider a terminal growth rate of 1% to account for a low GDP growth after 2050 and the technical efficiency leading to higher outputs. The market-based sum of the part explains the remaining 50% of our target price. We use an implied EV on megawatt multiple, which we computed from the peers market value for each production source. We believe the market is not fairly discounting ERG future capacity. As you can see on the left, the implied market value of ERG asset computed with the peers multiple supports a 45% upside from the current valuation.
The investment risk we consider in our analysis are long-term electricity prices, auction electricity prices, efficiency of technology, and lastly, its cost. Our buy position shows resilience to all of them, strengthening our recommendation. But we did not stop here because our valuation also considers another category of risk we called ESG risks related to sustainability issues that may impact the company. The first one deals with environmental regulation on repowering projects, while the second analyzes the consequences of not in my backyard movements, opposing to greenfield development. This factor affects the company, but again, the severity we estimated does not change our advice for the stock.
Buying ERG, you will be sure to do a sustainable choice. We created our comparative ESG valuation model based on 144 metrics to estimate our company and its peer approach to sustainability. Combining all the pillar score and weighting them according to an industry standard materiality metrics, ERG obtains an overall AA, outperforming the BBB industry average. Entering the detail, the company is one of the best when it comes to environment, with a triple grade, mainly achieved thanks to the low level of waste and tight control of the supply chain. On the social side, ERG invests in work developments and sustains local communities, but there are still margin for improvement in diversities and minority awareness if compared to peers. The score for the pillar is in line with the industry average of A. Coming to the governance pillar, the active presence of the family in the management and in the BOD influences decision independency. And right now, I bet you're thinking, oh, this is bad. But the correct conduct of the Garrone along the years and the absence of open litigation do not raise any specific concern. Overall, the output from the governance analysis is a BBB. As conclusion, we recommend you buy ERG, the profitable and sustainable choice for your portfolio. Thank you for the attention, and now the floor is open for questions.
Well, thanks a lot for you have blue sky for ERG. Some risk, as you said, were fully balanced in terms of, I mean, ERG responded well to all, but which is the main risk that could actually face, because you have to take into consideration a possible downside. If that is the case, where is it going to be?
Yeah, thank you for the question. If Lorenzo could please go to the disposal failure. Thank you. The main risk we considered after having analyzed 16 different risks lie in the disposal failure. The possibility of the disposal failure might arise, and in this kind of scenario, the company will continue to operate the gas plant and the hydro plant. In this scenario, so the gas plant will lower the EBITDA margin of the company. Indeed, as presented, the EBITDA margin of the gas plant is 17%. And for what concerns the hydro plant, the hydro concession will expire in 2029. And afterward, the EBITDA margin of the company, and in particular the EBITDA margin of the hydro asset, will lower for 46%. Our target price change in coherence with these assumptions, becoming 26 euro per share, with an 8% upside from the actual price that become an hold recommendation rather than a buy.
Thank you.
Alberto.
Okay. You presented a slide in which you compare the multiples of ERG versus other renewable assets. Could you list different variables that should be taken into account in order to understand why multiples between different renewable companies are different?
Sure, I will take the question. Lorenzo, please could go to the 8.8, the sum of the part. Basically, we analyzed a panel of selected comparable under the assumption of having an homogeneous EBITDA among the megawatts. To answer to your question, a big difference between the plants and the megawatts that you obtain with this analysis can happen if you consider plants with different ages and different incentivizing scheme. In fact, under this unlikely assumption, you are not able to compare in a proper way what the market is discounting, because you do not have the same average selling price of the other plants. In addition, the fact of the dimension here quite matter. If you have smaller plants, they could benefit of different incentive scheme if compared to the big one, and the same can be let's say approach can be extended to on what concern the load factor, that is the measure of how this plant are efficient. Bigger turbine have higher load factor that could be lead to misleading evaluation of those multiples.
Okay, so sorry, how can you therefore expect such a uplift in valuation if they were to dispose of the hydro and CCGT asset? Maybe I didn't understand exactly the technicality you used.
No, the fact in our valuation is that with the disposal of hydro and gas plant, those amount of cash that the company will raise thanks to the disposal will be reinvested in the wind and solar park that will be evaluated at the same multiple that the other companies will have. So we think that thanks to this, the company will have a re-rating because those assets are valued more than what concern the hydro and the gas on right now. And as you can see also from the multiple, the non-fuel renewable are traded at discount respect to the pure renewable one. And ERG is in the middle between those two type of niche of the energy market because it's transitioning from one group to the other. And if I may add something also to the question before, we tried also to estimate the phasing out of the incentive on ERG plant. If Lorenzo can go to the park by park analysis, we tried to estimate also every single plant, how the incentive scheme will expire in the future, and also how this incentive will go for the repowering of new of the old park in Italy. So, for example, for IP Maestrale, while for the other, we projected the incentive that will end, and so the park will sell the energy at merchant price.
Emanuele?
Thank you for your presentation. I have a question on the risks and evaluation. In your slide on the investment risk, which could affect the valuation, have you considered operating risk, not financial risk, for example, as regards the interest rates? And now I refer to the slide on your DCF and the WACC for the long term. It seems in your long-term scenario, these very low levels of interest rates will persist forever. So I would like to understand better your long-term scenario on interest rates. Thank you.
Yeah, sure. Thank you for the question. And if Lorenzo, you can please go to slide the sensitivity on the WACC and the G. So what we have done with our risk-free rate, if this is what you are referring to, we do not take into account the negative interest rate we have right now. Indeed, we used 1.9% risk-free rate. And so the expectation that we have is that in the long term, this risk-free rate might rise a little bit on today's price, on today's yield. And if we consider For example, the scenario we have now in US, where the interest rate is rising, we do not expect that to happen in the short term also in Europe. And we believe that this factor wouldn't affect that much our valuation, because first of all, ERG is located mainly in Europe, just in Europe, and we expect that this will continue also in the future. So with no exposure to the US market. And second, our investment case is on a material re-rating opportunity for the company. So the investment case is like independent from the rising interest rate that we consider 1.9%, which is quite conservative. And so we also in the slide we can see how our target price is anyway, our buy recommendation is anyway resilient to the variation of the WACC, also with an increasing interest rate.
Thank you.
Sei muto, Lorenzo, stai parlando.
If I may add something, we have normalized our interest on 10-year basis to account also for the variabilities of them. So,
Carla?
No, lascio la parola. No, nulla. Non ho domande.
Ah, no, mi sembra di aver alzato la mano. Okay,
no.
okay.
I'd have a second one. Today, 50% of renewable energy is actually sold merchant. If they were to dispose of the more dependable capacity, how would that affect the volatility of future, let's say, results of the company? How do you square these two issues of the strategy?
Can you please explain a little bit better the question?
If you take the renewable capacity today, and if you took into account even the repowering today does not get incentives yet, and would have to be sold merchant if they didn't find a PPA agreement. So if they sold the more dependable capacity, which is the hydro and the CCGT, which allows them to have a portfolio of energy to be sold on the market, and let's say help balance the volatility of prices. How would that affect the strategy of actually selling that part of the assets and business and invest everything into renewables?
Okay,
well,
let's go, Lorenzo.
In fact, yes, one of the forces that ERG has is indeed its flexibility to deliver strategies. So with the divestment of those two sources that you just mentioned, the company will be also edged by the possibility of different kind of strategies. We told you that the M&A, it's not a pursuable strategy for the company, but it will be also a possible solution if some problems regarding the growth might appear in the future. So thanks to the flexibility, the company would be able to sustain even more. We projected the growth for the plan.
If I may add something, the company is well edged under the perspective of prices. They are edged on a 3 years basing rolling with future on energy that enable company to sell at a certain price. Moreover, renewables has priority when we talk about selling electricity into the grid. So also if the sources are variable, we know that Italy is a country in deficit of electricity. So ERG, we would like to say that ERG will be able to sell what is going to produce at a price that they will be able to fix at a recent high level with the hedging policy, with the option, and with, let's see, repowering.
And if we are talking also about the variability of the generation, what renewables, the really differentiating factor for renewables is the geographical presence. And as we know, ERG is well positioned across all the Italy, but also in Northern Europe and in Central Europe. So this is really like an hedging policy against the variability of the climate change, of the weather that could affect the production of the generation of the electricity.
Many thanks to Università Politecnico di Milano. Congratulations.
Grazie mille.
Thank you. Grazie.
Grazie a voi.
Okay, so good evening, everybody. This is the UNIFI team. We are pleased to introduce you to our analysis of ERG. After a deep study on the firm, we came out with our recommendation. But first, let us say something about what ERG is. ERG is one of the most important Italian companies of the last decades, but it's not so much known among the public. That's mainly due to the fact that since 1938, they have changed scope so many times, becoming first a pure distributor, then a multi-energy in 2000, and finally becoming completely green in 2017. Currently, ERG has 3.8 billion in market capitalization and 1 in total revenues. It operates in wind, thermo, hydro, and solar. The main source is wind, with the most megawatt of capacity installed, and the highest contribution to the EBITDA. Instead, among the others, solar is the fastest growing one, while hydro and thermo are not target of near future expansion. The main market of the firm is the domestic one, but ERG is also present in many other European countries. Furthermore, they are planning to expand abroad, mostly in France, Poland, and the UK, where they have many dockyards ongoing. Future expansion will be driven by new projects and betterment of the one in place through repowering and reblading, as well as new acquisition in solar and wind, capable of accurate diversification on market share, and last but not least, know-how. While finally, the margins will be strongly dependent on the flexibility of the production system. That's something that ERG is already achieving, thanks to the condition-based maintenance, which optimize the timing and the efficiency of all the interventions.
84% of ERG revenues comes from the Italian energy wholesale market. This market is managed and organized by an intermediary, the GME or energy market operator, whose presence reduces bargaining power for energy sellers and energy buyers. Among the buyers, we find energy retailers and energy distribution companies, while on the seller side, we find energy production companies, such as ERG, Falk Renewables, but also Enel, so companies that can produce energy from all kinds of sources that can be renewable or not. In this market, a differentiation strategy cannot be implemented, and so the competition can be done only on the marginal cost of production. Indeed, the price implemented for transactions is actually equal to the marginal cost of production of the last unit of energy demanded. The price is affected by demand and supply forces, which can vary according to the hours, the days, and the seasons. We also detected that the national unique price, or PUN, is affected by the oil price and the Italian GDP. Now we can pass to the financial results of ERG, but first of all, it's important to identify the source of these results, which is the capacity. Starting from a goal value for 2022, we derived the growth role of the sources, and then we implemented the same trend for the years after. For each of the sources, the ratio revenues over capacity has been kept stable and equal to an average of the years before. While wind capacity and solar capacity are expected to grow, hydro and thermal ones are expected to remain stable. Now we can present you our predictions for the revenues, which are expected to grow at a 3.4% compounded growth rate. Our assumptions and predictions for the revenues are supported also by our assumptions and predictions for the PUN, which is expected to come back to pre-COVID values.
EBITDA margin is expected to follow the same positive trend as in the past, reaching 56% in 2025, thanks to the increased importance of sources with higher EBITDA margins. Moreover, margins are affected by the energy management performance. COGS are expected to slowly decrease, reaching 22% of revenues in 2025, but the positive result is partially eroded by the cost related to the operation and maintenance process, resulting in high SG&A growth. With respect to its peers, we can see a weaker performance of ERG in terms of return on equity, given higher financial expenses in 2019. Instead, return on invested capital increased from 2015, leading to a 6% compounded growth up to 2019. Both ratios are expected to rise in the forecast period, given the growth in revenues and better margins. CapEx is primarily focused on organic growth and co-development agreements, wind farms acquisitions, and investments in the operating efficiency of existing plants. The past 5 years have shown a strong cyclicality of CapEx due to the entrance in the hydro and solar industries. However, we do not expect this cyclicality to be maintained in the forecast period, as we believe ERG will continue to invest in the development of the existing business segments. After a recovery from the 2020 contraction, we expect capital expenses to stabilize, reaching an average of 2 times CapEx ratio. In 2020, ERG issued 600 million euros in green bonds, which have been used to refinance existing projects recently included in the portfolio and to finance new projects under development. These transactions will allow ERG to reduce the amount of long-term debt and to meet management's targets. The accumulation of cash and the rise in shareholders' equity will contribute to the decrease in debt to capital ratio over time and to grant an ordinary dividend per share of 75 cents.
Now we can introduce our valuation, in which we use first a DCF model and then the relative valuation method. Our DCF is a 3-stage model, so we compute the cost of capital for each stage, starting from the assumption of a recovery from coronavirus, then the stabilization of the business, and at the end, the convergence of the company risk toward the whole market risk. Our terminal growth rate assumption is given by the expectation of the International Monetary Fund about the future growth of GDP for developed countries. And changing the growth rate, our target is not so sensitive to cost of capital changes for higher values, but it is more sensitive for lower values. Given a net financial position of almost 1.5 billion euros, we derive the total value of equity, and then the target price, which turns out to be 27.9 euros. Considering now a sell and buy bonds minus and plus 15% around the price of the 22 of February 2021, we see that also our Monte Carlo simulation is in line with our DCF model. To further support our DCF valuation, we perform some relative valuations, starting from the enterprise value of megawatt multiples on 12 transactions between 2015 to 2020. And we derive a price of 28.9 euros. Then we take the enterprise value on sales average multiples for the next 3 and 5 years for ERG and its pool peers. And we derive a price respectively of 24.2 and 27.8 euros. We decide to use this multiple because we want to avoid as much as possible the earnings manipulations. Finally, we enlarge our analysis taking 3 different samples, and the largest one turns out to be the most significant and give us a price of 27.7 euros. So at the end, we can say that our relative valuations fully support our hold recommendation.
In addition, we identified the main risk for the firm, and we plotted them into a likelihood impact matrix. I will now present those of major importance. Variability of atmospheric condition can significantly affect ERG results, especially considering that wind is the most difficult source to predict. However, the firm mitigates the uncertainty through geographical and sources diversification of plants and using an accurate forecasting system. Incentivized activities represent 70% of ERG's EBITDA. Therefore, a drop in subsidies would have a negative impact on profitability. But European Union's recent push toward a green transition made such an scenario less likely. Finally, COVID postponed plants development and caused lower energy prices. But ERG proved resilient to the pandemic, and we do not think that a protraction of the actual situation would have a severe impact on the firm. We also develop a proprietary model in order to assess the ESG score of the firm, grading each pillar and setting A as the best and G as the worst possible outcome. We assign to ERG an overall rating of B. The firm is sincerely devoted to the environment, and so we awarded with top marks this aspect. It has not only significantly reduced its CO2 emission, but it has also undertaken a strong recycling policy and many initiatives for the safeguarding of biodiversity. We assigned to the social pillar a rating of B. The firm launched many initiatives with particular attention to young people, and it has also excellent labor standards and a minimum employee turnover rate, but there's a low level of money given to charity. Finally, ERG complies with all the latest standards of governance, but there are some negative aspects, such as an unbalanced ownership structure and few women in management, which led us to assign to this pillar a rating of C. Thank you for your attention, and we are now pleased to answer to your questions. We can't hear, I don't know.
Okay, Pinuccia.
Thanks for the presentation. A very quick one. What could change your recommendation of hold? And could just, for example, turn it into a buy or even a sell? But looking at the background you gave for the stock, what would make you change your recommendation then? Thank you.
In terms of buy recommendation, we consider the possibility to have higher incentives related to our business segments and the possibility of agreements with governments in terms of introducing some innovation in terms of green energy to achieve the green, low emissions of CO2 in governments. And also the possibility to have innovation in terms of technologies, so introducing high efficiency activities like the one that ERG is actually performing, like regulating and repowering. And in terms of sell recommendation,
I would like to add some information about our for the possible changes that could affect our valuation in terms of a sell recommendation. We have evaluated and we have considered the possibility of a change in incentive policies, in the sense that incentive policies that could incentivize tariff that reduce. Also, we have considered the fact that the company could invest a lower amount of, could decrease the investments and could decrease the capex. And also, we have considered a possible downgrading, a rating downgrade caused by a level of debt that is not sustainable.
Thank you.
You analyzed the electricity market in terms of the price, showing the GSE market regarding their Italian business. But if you have to think about ERG, is the market price of electricity important or not? And to what extent?
84 in 2019, 84% of the ERG revenues came from the wholesale market, the Italian wholesale market. So we could say that the price on the wholesale market is important for ERG. Also, we could say that there are some possibilities, the incentivized tariff that also influence also the revenues, which also influence the revenues in the sense that 70% of the EBITDA in 2019 was composed by the incentivized tariff, which are feed-in premium, feed-in tariff, and also the green certificates. Yes.
For example, in Italy, is important the market price because of how it's structured, the incentive on plants before 2013, because the price is the incentive is based on a feed-in premium, and therefore the market price influence the earnings, even if even on the incentivized plants.
I want to add something that's quickly. ERG is also planning their they're hedging in the long period since they want to develop a PPA system, that's a power purchase agreement. So they are looking for very big companies which aim to receive a stabilized price of energy for several years. And it's something that they still haven't really strong in their, I would say, power balance since they have just one PPA, but it's in their intention to develop new ones in the future.
Thank you.
Carla?
How do you take into account the ownership structure, I mean, in the valuation? Do you consider that or not?
Yeah, we have balanced really well how to consider it in our valuation. In one side, we know that we have a very majority shareholder is always a mess for minority shareholders, and so for numerically the biggest number of investors in the market. On the other hand, we have to say that ERG has changed its scope so many times in these years, or refinery, fuel distribution, and so on. And the governance has always been very innovative. I would say that the family is very brave. The members of the family are really brave to take innovative and very important steps. That's something really unlikely in Italian market, in Italian idea of familiar market. Even in the very small one, it's difficult to see. So if in one side we think that that's a problem, on the other side we think that the family has a really good background, and we could say that as investors we can trust them.
Thank you.
Emanuele?
I have a question on the choice of the multiple evaluation. In particular, you focused and you picked
we can't hear, sorry.
Or other kind of market multiples. So why could you add some color on your choice? Thank you.
Could you repeat, please?
Non si è sentito bene.
Sorry. Okay, my question is on the valuation, and in particular based on market multiples. You focused on the EV sales in particular. So I would like to understand why you focused on this metric and not, for example, the EBITDA, or so you can add more color on your choice. Thank you.
Yeah, we decided to focus on enterprise value over sales because we wanted to avoid possible manipulations to the EBITDA, possible differences related to the accounting choices of the companies. We have also performed a purpose average of the enterprise value over EBITDA. That supports also our hold recommendation. Here we can see that also for the enterprise value over the EBITDA, also for the average of 3 years and 5 years supports also our hold recommendation. So that's it.
Just a question about the debt and the sustainability. Do you see any red flag eventually? I mean, any risk in the near term? Can you elaborate a bit the question about the debt?
Yes, we considered our predictions over debt, considering lower amounts of debt over time. Because we analyzed the ratio net debt over EBITDA and considered the management targets that is 3 times net debt over EBITDA. And with our statements, the ratio was over the target that the management has. And we think that in our predictions, we consider that the company would be able to stay within the target in 2022. and arriving to a value of around 2 times net debt over EBITDA in 2025. And we consider also the intention of the management to increase the amount of green bonds instead of project financing, which is a lower cost of resource of finance. And ERG decided to increase the amount of green bonds from 2019, and also in 2020 they allocated other 600 million euros in green bonds. And this allows to reduce the amount of project financing, because the green bonds are used also to refinance these types of financing.
If I add something, there's ERG has a financial rating despite its low cost of debt of BBB-. Therefore, a worsening of the macroeconomic scenario of the firm, the company scenario, could cause a rating downgrade, which will determine ERG into the junk rate, and so therefore this could affect its sources of financing and reduce the investment plan for the firm.
Time. Many thanks to Università di Firenze. Congratulations.